We want to stay in the AI space and talk about another company benefiting from all the hoopla around it, Nvidia. Those shares up more than 240% this year, recently closing at a record high and scheduled to report its third quarter results after the bell tomorrow. Vinh joining us, who covers Nvidia for Keybanc Capital Markets. It's got an overweight rating on the shares and a $650 price target. All right, let's first start off here with the revenue growth story, John. Last quarter, or the previous quarter, I should say, you had basically a doubling in revenue. We're expecting to see almost a tripling of revenue from the most recent quarter here. How much further do you think this is going to go?
I certainly think there's going to be upside in the quarter and the guidance. I think there's probably more upside if you go several quarters out. Believe it or not, even with the tripling of revenues right now, Nvidia is still supply constrained. If they had more capacity and supply, they could probably increase revenues more in the near term. But hopefully, and the good news is several quarters online, I think Nvidia is already making plans to expand its capacity and bring more supply online going forward.
When I look at the revenue growth story, John, and I also look at what we're seeing in terms of margins and bottom line numbers, whether you want to look at GAAP or you want to look at adjusted profitability numbers here, the growth there actually is disproportionate to the growth that you're seeing on the revenue side. And I am curious as to why. Why is that profitability so much higher than the growth rate on revenue?
Because of their dominant position in the marketplace, right? If you're talking about generative AI GPUs, we estimate that Nvidia's market share right now is well north of 90%. We do think that AMD is going to start shipping in meaningful volumes on its Gen AI chip in Q1 next year into Microsoft. But beyond AMD, there aren't too many other alternatives right now. And given the competitive advantages and the software mode that NVIDIA has with CUDA, its position is dominant and it's able to command a premium to it.
Yeah, that first mover advantage really paying off there. As much as the stock has done incredibly well this year, since the last earnings report, the stock is only up about 7%. And in part, that reflects some concern about China-US tensions. How is NVIDIA balancing its access to China while complying with shifting US regulations?
Yeah, I certainly think that that's kind of a concern on NVIDIA over the longer term, right? In the near term, I don't think there's a demand issue right now. Their backlog is so deep right now that it's more than able to backfill any sort of export controls related to China right now. You've got just plenty of enterprise customers that are trying to generate their own AI stacks. You also have all these AI startups like CoreWeave that are putting up training stacks as well. And then you've got the rest of the world. Like we're hearing right now that lead times for NVIDIA GPUs are 29 to 36 weeks, and in some cases, well over a year. There's so much backlog that China is not a near-term concern at this point in time.
Gotcha. So in the end, where is NVIDIA the weakest?
I don't know if there's a weakness. I think maybe the concern over the longer term is, certainly we think that NVIDIA is developing kind of China-compliant GPUs. I think the concern that I have, and we just won't know until they start shipping it, is whether these China-compliant GPUs are enough for the AI practitioners in China to train the LLMs that they want to. And if not, that's going to probably force them to develop their own AI solutions.